Live. It's not set.
It's live.
Now we're live.
Welcome, everyone. As usual, me and Dr. Marcia are having fun.
Hey, everybody. Happy Wednesday.
Yes,
It's a
another
hump
Wednesday.
day. Happy hump day.
Hump day. Another Wednesday investor chats.
Yeah, Wednesday evening investor chat. This is the first Wednesday of the month. Oh my gosh, I just realized something. There are 5 Wednesdays.
Oh, in this month? March?
In March. So we may not do one next week because we have the investment club.
Oh, yes.
That Thursday.
That Thursday. You need the time to,
Yeah, I have to prepare for that. So maybe on the 10th, we'll not have it on the 10th, but we'll resume on the 17th. How about that?
That's cool. Yeah.
Okay.
Yeah, I got to write stuff down myself, too.
I know. I can put it up here. No chat.
We'll go back. So we'll start back up on the 17th. Awesome.
Hello, Miss Kitty.
Hey, guys.
Welcome to our Wednesday evening chat. And you know what? We'll make the announcement again at the end of the chat, Nakia.
Okay, yeah, we'll do that.
Okay.
And make sure that they know. But you guys know you can come and see us every Wednesday, but if we're missing, we'll explain why. But today we are answering a question.
Yes.
So,
yes.
You guys are sending us questions through the different platforms, and we want to thank you for that. So here's the question. What is the difference between mutual funds, index funds, and ETFs?
Yes. As a matter of fact, that question came from one of our audience members last week. She asked us if we can talk about the differences between the three. Of course, we said, sure. Why not? And it's good because it also keeps me in the mindset of continuing to refresh and learn things that I've already know. So, I like doing that. I like that. I'm a research nerd. So, so why don't we go ahead and get started?
Cool.
But first, a disclaimer.
Definitely.
Okay, guys. I got to stop saying guys too. All right. So I am not a financial person. Everything that I've learned has been through self-teaching, investment clubs that I've been a part of. So when I mention anything like a mutual fund or stock or an ETF, specifically, it is not a recommendation to go out there and buy and sell it. It's for education, no purposes only. Okay, so let's get started. And the way I thought I would address this is to look at it in layers. So we're going to first talk about what a mutual fund is, and then we're going to talk about an index fund, and then we'll end up with talking about what an ETF is. And so let's get started. The thing that they have in common is that they are a basket of stocks or a basket of bonds or a basket of money market instruments, and they are professionally managed. So what do I mean by that? So when we talk about a mutual fund, we're starting it up top with a mutual fund. Being professionally managed means that if you invest in a mutual fund, you don't have to pick the stocks in the mutual fund. You don't have to worry about how to diversify, how to rebalance the fund. That portfolio manager manages that portfolio. And that person who is managing that portfolio, hi Alicia, is responsible for buying and selling the stocks. They are responsible for making you money. They are responsible for, in the case of a mutual fund, beating the returns of the stock market. That is their job. So if that's their job, you got to pay for that. And so you've got to pay like fees to the mutual fund for it to be managed. Okay. And when you invest in a mutual fund, usually there's a minimal investment, and it's a large minimal investment. Just like you pay large fees, you're going to pay a large minimal investment. And in the case of Vanguard, most of their mutual funds, the minimum fee is $3,000 on up.
Mm-hmm.
So that's with the mutual fund. The other thing is with the mutual fund, when you place an order to either buy or sell a mutual fund, you don't get the price of it until the end of the day after the market closes. So the price of the fund is not calculated until the end of the day. The way that I found that out, it was a personal experience. I decided that I wanted to sell one of my mutual funds. So I called up the broker and I said, I want to sell the funds. And it was in the morning. And he said, okay, we'll place the order. We'll take care of it. I said, okay, so we'll do it today, right? She said, yes, at the end of the day. And I told her, no, I want to sell it now. She said, hi, Nancy, this is a mutual fund. It doesn't work like that. We will sell it at the end of the day. So that's how I learned about, mutual funds. I thought that they were, the transaction happened throughout the day, and it doesn't.
Wow.
It is not traded on a stock exchange. So that's what a mutual fund is. Okay.
So now what's an index?
No. So the difference, okay, so this was mutual funds. We're taking it down. I shouldn't say down. We're taking it to another level and talk about an index fund. And just like a mutual fund, it's a basket of stocks or a basket of bonds. But they're specific stocks. And with an index fund, the stocks correspond, the stocks that are in the index correspond to one of the stock market indexes. So what are the stock market indexes? You got the S&P 500, you got the Dow Jones, you got the NASDAQ Composite, you got the Russell 2000. So when you have an index fund, the stocks within those index funds are specific towards the index. You do have a manager, and it can be what is called passively managed, because you don't have to do much research to pick out stocks. Mm-hmm. They don't try to beat the return, the total return. They actually are going to, their return is going to be reflective of the index. So it's less expensive when it comes to the fees. And when you see an index, it usually has the name index in it. Like Vanguard has the 500 index shares, or the Vanguard Dividend Appreciation Index shares. So that's how you can identify a mutual fund from an index fund, in that it has the word index in it. Okay.
Yeah.
And last but not least are the ETFs. And I will tell you a story behind that too. So ETFs were started around 1993. ETF stands for Exchange Traded Funds. So ETFs are bought and sold on the stock exchanges. And your stock exchanges are your
S&P,
New York
Oh,
stock,
the New York Stock
stock
Exchange,
exchange,
NASDAQ.
and the NAS. There you go,
There
and
you
your
go.
NASDAQ. Now, those are the two major U.S. stock exchanges. There are stock exchanges all over the world. But when we talk about stock exchanges, we're talking about New York Stock Exchange and the NASDAQ. So your exchange traded funds are bought and sold on those exchanges. And the nice thing about exchange funds is you can buy and sell them when the market is open. So you don't have to wait until the end of the day when the market closes to buy these exchange traded funds. What I ended up doing when I had that experience with the broker who told me I couldn't buy or sell my mutual funds until the end of the day, I then switched my mutual funds to exchange traded funds.
Okay, yeah, I remember you mentioning that a while back.
So they're a lot more flexible than the mutual funds. And you can buy the ETF like you buy a share of the stock. So you don't have to have that minimum 3,000, investment.
Right.
And so the ETFs you can have an ETF that tracks the index, like the SPY or Spider, or the QQQ, which tracks the NASDAQ 100. You can have ETFs that tracks the different sectors, like, okay, say you wanted to buy all energy stocks, you can have the ETF which tracks all energy stocks. Or if you wanted to do healthcare, you can have an ETF that tracks stocks in the healthcare sector. So yeah, that's the ETFs. That's what that's all about. Yeah. So that's basically the differences between them and the similarities between them. It's not a lot, but if I'm going to buy, I would not buy, and this is just me, I would not buy mutual funds. I would stick with exchange traded
Exchange
funds.
funds or exactly.
Or either the index.
Index.
Yeah, yeah.
Yeah.
Okay. Alicia says, I wanted to buy the Vanguard Total Stock Market Fund and bought the VT. Okay. Because it was cheaper. Yes.
Mm-hmm.
I'm familiar with both. The VTI, it is cheaper than the VTSAX. Mm-hmm.
I like how you explain things like shopping.
Well, you know what? We like to shop.
Yeah.
So
I'm not shop investing by investing. It's much easier.
Mm-hmm.
It's better.
So yeah, that's basically the difference. Mm-hmm. So any questions about that, guy, ladies?
Yes.
Down and dirty?
Definitely would like questions on this.
Yeah, anybody invested in exchange traded funds? You know what? You could also, one other thing is when you talk about exchange traded funds, you can have you can buy exchange traded funds that are geared toward commodities. Like I want exchange traded funds that have all gold stocks in them or all silver stocks in them. So it's so much more flexible than buying mutual funds, and that's what I would stick with, the exchange traded funds. Mm-hmm.
Yeah. We got some say yes.
Yeah, I found that they're usually, yes, it's usually an ETF for every index. Yes, the SPY, QQQ. I'm sure there's one for the Russell 2000. Yes.
Yes.
That was quicker than I thought it was going to be. But you know what? When you talk, when you straight to the point.
Yes. Knowing the differences does help.
Mm-hmm. Mm-hmm.
It does help.
And normally when we have our 401ks, I know when I first started with my 401ks, it was just all mutual funds. Yeah. Yeah. And then that's when I eventually switched them over to exchange traded funds. But that's after I started educating myself and figuring out the differences and experiencing the differences. You can make decisions that will help you reach your goal. I'm having fun learning to invest for myself. Yes, Alicia. And you know what? That's what it's all about, is learning how to do this for yourself. You will be surprised at, there's a lot of information out there, yes, but you'll be surprised how you can actually take charge of not only your own 401k, but when it comes to developing a stock portfolio. And I tell people, you can actually do this. Yeah, I know it's a lot to learn, but it's your money. And nobody manages your money better than you can. You just have to take the initiative and actually want to do it. I took my off-managed plans. Oh, excellent. I'm so proud to hear you say that, Alicia. You're doing it for yourself. Yes. Yes.
Nancy has a very interesting question.
I have Fidelity. Should I put money there or into my Vanguard account, which is with my, it really doesn't make any difference. They both have index. I have both Fidelity and Vanguard. So they both have ETFs. They both have index funds. They both have mutual funds. So and they are top of the line as far as I'm concerned. Top of the line brokerages. I love the fact that I can do research, especially I do a lot of research in my Fidelity account or my broker, and also Vanguard too. So customer service, you can't beat it. If you have an issue, you can get on the phone and talk to someone. And so I consider both Vanguard and Fidelity top notch when it comes to brokerage accounts. And I have to shout out to TD Ameritrade because they're too.
When you switched, I think you said from your 401k plan, I think Fickle Kitty is asking about, was there a greater return after switching from that? I think when you were mentioning about.
Did you see a greater return after switching? No.
Okay.
No, it was because they were, it was like the similar funds. It just went from mutual to ETF. So there was not a greater return. No. Or maybe, you know what? Now that I think about it, when I look at, well, because the mutual fund was really managed for me, there might have been maybe a smidgen more, but I also realized I was paying a lot more in fees with that mutual fund than I was when I switched it to an exchange traded fund.
Okay.
Yeah.
She was asking that, the difference.
Yep. Switching from to 401k. Yes. And make sure it's like from apples to apples, make sure that they're similar.
They're similar.
Because even with the ETF, you will actually see that the fund may be similar, but it will say like index funds, it will have the title of the fund, and then it will have ETF afterwards.
Okay.
So that you can tell the difference. What books do you recommend, and why do you, for the year with the IRA? One book that I use as a reference book, it's by Tony Robbins. Where is that book? It's probably in my bedroom. I can't think of the name of it, but it's about 700 pages. It's like everything you need to know about money.
By Tony Robbins?
By Tony Robbins.
Okay, no, it's not in this room.
Okay. And mine is all, but what I'll do is I'll put the name of the book in the YouTube comments, or either in the Facebook.
Yeah, we'll do that in the description and get a link to it.
Yeah, that one book is so informative, and like I said, I read it maybe 3 or 4 times, and I keep going back to that book for references. And Nancy, I'll put that book in the YouTube comments. Yeah. And why do they set a $6,000 limit for the year with the IRA? I know it's 7,000 with the Roth. With the Roth, I don't know. That's something that I've always known that they do. They always put that limit there. So, oh man, now that book is on my mind.
Oh, I think I know which one it is. Is it the
Black and Gold?
The 4 stages of building wealth?
It's a 700-page book.
Oh, 7 simple steps. It's the money master the game. That's it.
That's it.
Okay. No, the one that I have is the 4 stages of building wealth. That's the one that I have. But it's Black and Gold too. That's
the book I would recommend.
Okay. Then that's the one I'm going to link in the description box, guys. I'm going to link it.
I think everybody should read that book, because it's so informative. I mean, it's really detailed. Really detailed.
I'm going to link the other one.
Alicia said she has the audio version. Yes, so do I. I started off with the audio version. I'm like, oh no, I need to go buy the book. And it's all marked up in all different kind of colors. So yeah, that's the book I would recommend, definitely.
And what platform, like internet, like I want to say internet, but that's the word I can think of. What website do you usually go to for more information on, just money management and investing?
Oh, there are several that I use. And it depends on if I want general information. I will tell you Investopedia is probably the best when it comes to learning the language of investing. It is like the encyclopedia of investing. So Investopedia.com. I also use other research materials like the Investor's Business Daily, Seeking Alpha, of course, Morningstar, Yahoo Finance.
Yahoo Finance, I use that a lot.
Yeah, so those are some references or resources that you can use when it comes to learning about investing. But definitely in Investopedia.
Investopedia. Yes. So I wonder how many do we have any of the ladies? Like, we had an amazing workshop. Like on investing in dividend growth stocks, which is somewhat different from dividend stocks.
That is now my jam, as they say. Market Watch. Yes. Market Watch. I have my portfolios on Market Watch. Yes. Put tons of money into it. Well, he started putting small amounts at a time and building up his portfolio. And that's one of the things you have to do. You have to consistently put money into your accounts to be able to buy. And so that's one of the things that we're teaching in the investment club. In fact, I sent a reminder to everybody. Put money in your accounts for the month of March. so that when we're ready to buy stocks, it's there. You don't have to go searching for it. But yeah, and remember, he's a long-term investor. He's a buy and hold. So when he buys, he's not selling. He buys and holds his, and he's also big on buying. We're talking about Warren Buffett. Warren Buffett is also very big on buying undervalued stock. In other words, companies that are doing they're doing well, but they maybe had something bad happen to them. The stock price went down. He scoops in and he buys undervalued stock. So if the price is too high and it's not correlating with what the company is valued at, he won't buy it. He'll wait until that price comes down. So he buys the company when it's cheap. He does an awful lot of research. That's all he does. He sits and he reads companies, what are they called? The 10 Qs, and that's what he does. Yeah, so he understands how his companies work. That was his job. So that's how he got rich. Dollar cost averaging. Yes, that is a way that you can use to accumulate shares.
Mm-hmm. I like what Alicia says too. This helps with consistency in investing too.
Yes. Mm-hmm. You won't have to remember to do it. It just automatically goes from your checking account or your savings account into your brokerage account.
So you're ready to buy that stock when it's on sale.
When the market is down like today.
Yeah, right.
Yeah.
A couple of more shares of a stock that I've been enjoying, and I saw it went down a little bit, and I said, let me get a couple more shares of those.
Mm-hmm. So, and that's how you're accumulating and building your portfolio.
Yep. Compound.
Okay, Kitty just said she set up her automatic auto deposit. Yes. So you guys are doing well as far as setting yourself up to build a good profitable portfolio. You're doing what you have to do. You're doing what you need to do, making sure your account is funded, buying or doing dollar cost averaging. So yes. Mm-hmm. 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 Any other questions for me tonight? We're hitting on about 6:30.
Oh yeah. Okay.
Mm-hmm. How much of a paycheck should go to it?
That's a
okay. How much of should go into your brokerage account? That depends on your budget.
Mm-hmm. Everybody's budget is quite different.
Mm-hmm. After you figured out your budget and paid your expenses for the running of your household, whatever you have left over, you can take a portion of that and put towards your brokerage account.
Yeah.
Is it better to manage your own portfolio or use a broker? You're asking the wrong person. I believe that we should be managing our own portfolio. But that depends on you. Some people don't want to do that. Mm-hmm. And it's okay. It's okay. But if you decide to use a broker, know what that person is doing with your money. Meet with that person on at least twice a year, if not every quarter, to see what's going on. Exactly. Explain dollar cost averaging. Okay. What dollar cost averaging is a way for you to accumulate shares every let's say every month. Mm-hmm. So let's say you decide that you're going to be spending and paying $50 every month to buy one stock. And the stock is $50. So you're going to buy one share every month. So you may decide, let's say in March, the stock is $50. So you buy one share. And let's say in April, the stock goes up to $70. So you're spending more. In May, maybe the stock goes down to $25 a share. So over the premise is over the course of, let's say, a year, you will hopefully average down the total cost of that stock by buying more shares when the stock is low.
So,
And you won't be buying as many shares when the stock is high. Did I say that right? Buy more? Yeah.
yeah.
Yeah. So that's what dollar cost averaging is. And you're buying consistently, regardless of what the stock price is.
Awesome. This is really cute. I like this comment.
Go for it. I was spending $800 a year for management fee. Yeah. See, and that's when you find out how much am I spending for you to manage my account.
Mm-hmm.
Yeah, you're right, Alicia. You are absolutely right. Okay. Mimi said, can you find education information on my investment platform? It depends. What investment platform are you using? If you're using, well, all I can say is the big girls platform, like the TD Ameritrade, the Fidelities, the Vanguard, yes, they have all kinds of information. In fact, they even have classes. I know TD Ameritrade and Fidelity all have education classes. You can check those out too. I know that they have those.
Mm-hmm. Chase has it a little bit too. Your bank, check your bank and see, but it's all mobile friendly. So it's like app. It's an application. So yeah.
But yeah, I would encourage you to at least to try and do this yourself. Try it. Look at your portfolio instead of when that monthly statement comes to you, look at it and try to figure out what's going on with that monthly statement instead of filing it away. Like a lot of us do, or I used to do that. In the savings account. Right now, my funds are accumulating in a savings account. I need to do something. Yes.
Start investing.
Most financials now have some education. Yes, most of the institutions do have they have financial materials on their sites. So take advantage of that. Take advantage of those of that information. And if you can talk to someone, see if you can talk to someone. Most of the I know Vanguard has, you can call and talk to someone about investing. I don't know about Fidelity, but I know Vanguard you can. And they will answer your questions. I mean, that's what they're there for. It's not going to hurt to call and ask.
Awesome.
All righty. So if you guys have any other topics you'd like for us to discuss, let us know. Let us know. Now, we're not going to have the Wednesday night
That's right. We're supposed to be mentioning that.
Next Wednesday, because we have our monthly investment club. So I'll be preparing for that. So we'll meet up again on the 17th. Drop us a line if you have a topic you'd like for us to discuss. I'll be happy to do some research and bring it to you.
Yes, and definitely, guys, check the website out if you haven't already. We have an investing basics book. So if you're new to watching us and learning about investing, we suggest that you download that. It's full of awesome information about shopping. But it gives you, but it's based on investing. So it's so easy to understand and it's very motivating to get you started. So definitely check the website out for courses too, and for the membership, because she's sharing a lot of nuggets in those membership courses. So in those sessions. Yes.
Because the goal is to help you to build your own stock portfolio. And that's what we do in the membership, is to help you to do that by analyzing stocks and just talking about stocks in general. Mhm.
Good. Good for beginners. It's also great for those of you who are seasoned in it too, and you're just still trying to figure out how to navigate and manage your portfolio. Marcia, you know you're awesome with it.
Thank you. All
Awesome.
righty.
Cool. Well, you guys know what to do. Just, leave us a comment and we will see you in two Wednesdays.
Thanks for coming. Thanks for
Bye,
coming.
everyone. We
Spending
enjoyed you.
time with us. Yes. Okay.
Bye.